Okay, so I'm going to go to the next part because this is the second part of that video. So, what is currency pair? So, a currency pair is a pool of two currencies, right? Showing how much of one currency you need to buy one unit of another currency, just like we explained. The one unit here is the base currency. How much you need to buy the base currency is the quote currency. So, the format is base against quote, which should not give you the exchange rate. Just like the example above that we gave previously, Euro USD is equals to 1.10. So the base is the euro, quote is the dollar, and our exchange rate is the 1.10. You understand it? The base currency is the one you are buying, the quote currency is the one you are paying with. I am just trying to emphasize it, so you just get the basic thing about the currency pair and what it's all about. So we have three types of currency pair. When you're dealing with currency, that means you're dealing with countries, and there are tons of countries, right? So the pairs of each that have been created or that actually exist have been grouped into three pairs. We have the major currency pair, we have the minor currency pair, and we have the exotic currency pair. So starting off with major. Now the major currency pair, these are pairs that include the US dollar. I've said it before in the previous lesson that the US dollar is the primary currency. Alright. The United States of America is the world power, or is known as the world power. Whatever name it is that they've given themselves, but those people are highly significant. Now the major currency pair are pairs that include the US dollar and one other major currency. Take note, one other major currency, not one other minor currency. Whatever is paired with the US dollar, as long as whatever is paired with the US dollar happens to also be a major currency. We all know that the US dollar is a major currency. So whatever it is that is now paired to it and is now actually major, alright, two majors, they all lie under the major currency pair. But if whatever was paired with the US dollar is not a major currency, then it's probably going to be in an exotic, but we'll get there. So examples of major currency pair are Euro USD. The Euro is a significant one. The USD JPY, the Japan people are good. JPY. So JPY is Japanese yen. So that's for the Japan people. Then the GBP USD, the British pound, and those people. USD CHF, Swiss franc. Who uses this? I think it's Switzerland or something. So the characteristics of major currency pair: high liquidity, lots of buyers and sellers. It's major now, majority. A lot of people are always there. So and when they say high liquidity is because there's a high money in that market. Because there are a lot of buyers, there are a lot of sellers, right? A lot of people want to buy, a lot of people want to sell. That means there's a lot of money going into that market. Tight spreads, right? A lot of money going into that market. That means your business is good. So business is good. There's no reason you want to overcharge your customers. You have supermarket. People are coming in and going day by day. Day by day, you are meeting a lot of people coming into your supermarket and buying. So there's no reason you want to overcharge them because you still make enough money. Alright, tight spread, low trading cost. You don't have to pay much because you want to trade that particular pair. You don't have to pay much. Now the thing is that spread here is how the brokers make money. But we're still going to explain that in a further lesson. So spread here is how the brokers actually do make money. So since a lot of people are actually in this market, so they are tight spread, so they won't really charge you more. And it is the most traded and most stable. So if you're a beginner and you are looking for a currency pair to start to trade it, I would advise you to always look for a currency pair under the major currency pair. So you might get a little bit twitchy if you are choosing USD JPY. The Japanese pairs are actually also a little bit different to calculate than the actual one. So just not to get you confused, if you're a beginner, you want to start off trading, you want to pick one, I just advise you to pick like Euro USD, GBP USD. Is the basic, is what everybody knows that it's not like it's a format, but it's the simplest to help you adapt in the forex market, and you actually just have to choose one. I would advise you to always choose one. You can just choose GBP USD, you can just choose Euro USD, you can choose USD CHF, right? These pairs are easy to calculate, easy to go about, easy to understand, right? So the second one is minor currency pair. These are pairs that do not include the USD but are still from major economies. Now, just like the major, right? The USD is a primary currency. Now, under the minor currency pair, there is no USD, but the currencies that the economies and currencies that are under the minor currency pair, they are actually also major economies. That is, these countries are still doing well for themselves. Take for example Euro GBP. When you combine the Euro and British Pound, when you combine the Euro and Japanese Yen, when you compound the Pound and Japanese Yen, right? Those are examples. These are countries that are still doing well for themselves. So once you look at it, you see a particular pair, right? You are looking at that particular pair, or you did not see what you are not looking at. You didn't see the US dollars. All right, the US dollar is not there, so you want to pay attention to what the currency under that pair. So that's how you know if they are minor or they are from major. So the characteristic of this currency pair is that they have low liquidity that are major. You understand? Everybody's in major currency. A lot of money is going into major currency. So we have the ones that are less. So it's not like people will actually be going there, you get, but some people might still consider it as an option, but it won't really be like a main thing like the major currency pair. Higher spreads than major, obviously. You understand? Yeah, you have two supermarkets. One is doing well day to day, the other one is just trying. So the tendency for the other one to want to overcharge our things, because so that maybe at the end of the month, supermarket one made a total sales of 2 billion. So that supermarket two wants to always like maybe make at least maybe reach the same targets as supermarket one or more. She would tend to want to like increase the price of her goods, because she knows that she does not have as much customers as supermarket one. So that's just the logic of minor currency pair, and it's also useful for diversifying trading opportunities. Now, the third one here is the exotic currency pair. These are pairs that combine a major currency with a currency from a small or emerging market. Basic example you know is the US dollar to naira. The US dollar is a major currency. Now, a small and emerging market or economy is the Nigerian naira. Alright, so USD naira and USD Polish lira. Most of the time, anytime I look at exotic pairs, I haven't even like heard of that particular country. So most of them are those ways. So I would never advise anybody to step into exotic currency pair. Before you even see an actual way to trade exotic currency pair, you'd have to be looking at the monthly time frame or something like that. Exotic currency pair are mostly traded when you are going from one of like in a pair now, just like USD to TRY. Let's say you are going to Turkey and you are the United States of America citizen. You'd have to convert your USD to Turkish lira. That's a method of forex trading. That's the basic way people actually deal with exotic currency. People don't actually like pick it up their phones and trade, because why? Now the characteristic is low liquidity, because there is no money there. Nobody's going there. I don't know if I just see you step on your phone and you open your phone and you're trying to trade USD engine. I don't know how to look at you, but then I just hope you're well at that moment. And then you have high spreads because it's more expensive to trade. Now supermarket one, supermarket two tried increasing the price of our goods because she has fewer customers than supermarket one. Supermarket three has lesser customers. So you can imagine, just another basic example. I wanted to get a particular fragrance. I got it in a huge supermarket because the person always have customers. Because it was a body mist. I got it for 2.5, and then it was out of stock. And I went somewhere else that I just found it in somebody's place, and she called it 5,000. That's an example, right? Because people don't actually you cannot compare the customers of that supermarket one to supermarket two. That's just the basic example logic I'm trying to use to explain this whole currency pair of again. So if you're a beginner, all right, always choose a currency pair that is under major currency pair. There's nothing. Maybe later, once you're getting advanced, you're following your rules, you're getting disciplined and consistent, you might tend to stick your hand into minor currency pair if it's something that you see that okay, this pair actually delivers my edge, like it actually like makes me money. It's not bad if you like step your hand into. But you see exotic, I don't think there is something you'll be looking for there. Now, this on the other hand is what I'm going to explain in another video. Still do not know how I'm able to like talk for so long, and I'm just trying to make sure that these are properly understood, so I'm not going to like cut things out. So I'm going to make another video for explaining the bid and ask price and the whole concept about it.